So part of the risk of waiting for lower rates or this housing crash that never occurred is in the meantime, home prices have gone up. And so, of course, as a consequence, during that time that you continue to wait, you're not building the equity that you could have been building if you had chose to purchase earlier. So that's the one big risk. The other thing is, how do you know when rates are going to drop and by how much? We don't know. I've reminded everybody that Fannie Mae, for example, they're forecasting still that conforming 30-year loans are going to be at 6.1 at the end of this year. That certainly doesn't suggest that we've got a big drop coming anytime soon. And to the extent that, sometimes the mortgage market rent rates can get kind of volatile, where you can see a dip briefly and then it goes back up. Anyone remember last September? The problem with that is that volatility sometimes can move very quickly. And as a consequence, you don't have an opportunity, if you're timing the market, to grab that quick enough to take advantage of it. So that can be a risky thing too. The other thing is, when rates do eventually drop, as a buyer, you're going to have a lot more competition from other buyers. That could make it harder for you to get an offer accepted. And then you all may start going back to the bidding wars where everyone's offering higher and higher over list price, and et cetera. So that's a risk that you're undertaking by having waited up until now and still wanting to wait until rates eventually do fall. Um, and while you're waiting, what happens if, again, the data doesn't support it now, there is a weakening of the economy? What happens? You could be faced with what we would call employment and qualification risk. What if something changes with your job? Maybe you get your hours cut back. Maybe you get laid off. It can affect your ability to qualify based on debt ratio. So you want to be careful of that, that as you wait, you could have something unforeseen happen in your employment income situation that in hindsight would have suggested you shouldn't have waited and should have bought earlier. And again, the crash may not come anyway, even if rates do remain elevated, for a couple reasons. Housing inventory is still very, very tight. Plus the fact we still hear about those institutional buyers who buy up homes at the expense of the regular families who are trying to buy a place to live in. With those two factors still involved, that keeps the pressure on prices, certainly keeps them from falling, and I think has contributed to those prices going up. So again, those of you who have been waiting for those prices to fall, you've lost that opportunity to build equity. And at the time you do finally decide to start looking and maybe buy, you're going to be facing probably higher prices than you would have if you looked at something sooner. So that's another risk.